Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Train, bringing the market recap video for Wednesday, April 13th of 2016. Not a whole lot of activity happened in the market today, except a very important breakout in some economic news, as well as some earnings report news. For those of you who are new to the market and want to learn a little bit more about trading earnings, check out the latest Trading Justice podcast, where Coach Tim and myself discuss just that, trading earnings, protecting against investment, against downside risk, and so on and so forth. But we start here with the actual market itself, and we're going to look at the S&P 500 as we always do. On Monday, when I was doing the market recap, I kind of drew this line right here, and as you can see, it was right in that resistance line, which was still in a bearish downtrend. And as you can see, the market just does not want to slow down. In anybody's estimation, in any discussion, this is what we call a bullish breakout. It's breaking out of our trend line. It's breaking out of a previous known resistance area, right into this range, right around 2065. It's currently at 2075, which is good, 0.5% above that resistance level as well. And that's an important distinction, as you were seeing some type of high base here. And when the market breaks out of a high base, typically it has a tendency to run after that. And despite what you might think from an economics perspective, that's an important distinction from a technical perspective. And kind of coming from that economic discussion, I had a couple emails today wondering, well, why in the world would the market finish so strong? I mean, open up at 2056, close up here at about 2076, 1% move to the top side. Why in the world would the market move so strong and break out of resistance on economic activity that even in the most kindest economic terms? I mean, here's on Wednesday, you had core retail sales, which was a miss. You had the PPI report, inflationary index, which was a miss, a big miss. And you had retail sales, which is the one that excludes some of the other inflationary items. You have this, like cars and whatnot, that might be too volatile. You had that come down at a negative 0.3. Those are concerning for the marketplace. And so you might ask yourself, well, we get bad economic news where the market goes up. Well, guys, from 2009 on, this has been a Fed-driven market. You don't fight the Fed. If they print money, if they don't raise interest rates, if they come off their plan and they start pulling back down into ZIRP or quantitative easing, the market's going to go up regardless of what the economy does. If there's more money in the system, historically you don't fight that, you don't question it. And so that's kind of the whole mentality right now, is no news, bad news is good news, because it means the Fed won't raise interest rates, even though I think it is damning for generations in the future. That's going to be the case right now. We have to use that information right now to make decisions over our own investments, which means I'm still buying stock, and I'm still putting on covered calls, and maybe I don't do as much protected put options. Another breakout in the market happened on another market index, and this one I feel is very important as well. Number one, you're sitting right here at this old, very important resistance zone right around 110 in IWM, which tracks the Russell 2000. You have an old resistance zone right here. You were slowing momentum significantly, and it broke out on top of that level. Small and mid cap stocks doing fairly decently today. The one concern, I'm going to add an indicator to the chart here. The one concern I have on IWM, let's go ahead, excuse me. Let's go ahead and look at, let's go simple. We're going to add a simple moving average. Add selected. Let's change the settings here. We're going to go to a 200-day, and we're going to go to a width of 4 because it's the 200-day moving average. As you can see on this 200-day moving average, this is the concern. Support, resistance. big resistance before a huge drop, and that's right where you are right there. I don't use a lot of moving averages, but this is something that you can't debate. The 200-day moving average is a battle zone. It's a battle zone between buyers and sellers. If this breakout is true, it's going to get above this level, and if it does get above the level right there at about 112.50, if it does get above that level, at that point it's time to say, okay, let's look at some small and mid cap stocks from a potential trading or investing perspective. It's not overextended like the market itself is. It's not overextended. It is coming into that major resistance zone. Huge breakout. Let's see if the small and the mid cap index can continue that run. Let's look at the dollar here. Dollar's had a very strong last 2 days. Market recap video that I did on Monday was right here. Was right here. Downward, slowing momentum, big upward movement. Expect this to continue up into this range in terms of that next retracement. Lower low, lower high. Lower low, lower high. Now we got a lower low. We're coming back down into that next lower high. Where could that next lower high kind of set forth? Anywhere up into this range, somewhere around 95, where it currently is, to around 95 and a half. If it gets up to 96, you might see some type of neutrality form on the United States dollar. But right now, this is kind of just in that overextended range down here. Now it's starting to come back up in price. Look for this to form what technicians love to call as a bearish retracement. Crude oil breaking out of and 200-day moving average. We just said that on IWM. Look at crude oil here as well. I'm going to take off the moving averages for right now so we can see the price instead of the moving averages here. So let's apply that. All right, is it a breakout? Is it not? Right now, it's not. 2 days ago, as it was approaching that 42, we said to call off some of the call options that you bought on USO last week on the market recap when we nailed this retracement last week. Right now, it's really kind of struggling at this 42 mark, which is not abnormal. It's normal to struggle at resistance because traders are programmed to sell at that level at resistance, and that's kind of what's happening here. If it does get on top of 42, let's see where this puppy can run into. And on the upside movements in price, we don't have a lot of evidence here. The only one we got is this one, but I don't expect it doing that. Expect it to come into maybe overhead resistance somewhere around $47 to $50 where this head and shoulders pattern was. The left shoulder and the right shoulder was right around 47 to 48 with the head right around 50 to 50 and a half. So if it does get on top of 42, you have an upward potential of 10 to 15% more in rising in crude. But for that to happen, the dollar has to retrace and then start coming back down. Watch that $42 mark on crude before you watch anything else. Silver breaking out of 16 just 2 days ago, slowed its momentum right now. It's nothing to be concerned about. I love silver. You love silver. Everybody loves silver. For the rest of the week, trade with caution. A couple things that we saw today. JPM announced better than expected earnings, and get this, you'll love this for all you guys who love the financial markets. They were expected to have abysmal earnings. They had slightly better than abysmal earnings, and it's up 4.23%. That led the entire financial sector up above resistance right here, up 2.27% as well. Banks, some of the biotech stocks did really well as well today. And let's just give the little engine that could GoPro. Let's give the little engine that could GoPro a nice, huge round of standing ovation. This is Matt Justice Tackle Trading. That's a golf clap for wheeling and dealing and forcefully stilling one of the creative designers for the Apple iPad and iPhone, and bringing GoPro into the next wave of the future. Many of you know I am a GoPro owner. I've been a proponent of a GoPro. It's a great covered call stock. And it was amazing today to see it up $2.22 or 19%, not even on earnings, 19%. And look at the huge explosive news. This is how much people love Apple. This is how much people respect Apple. Once you pry away one of their creative designers, the stock goes up 19%, literally representing billions upon billions upon billions of dollars in investor cash flow today. That's why we love Apple, and that's why we love GoPro. However, a little bit of caution right here at $14. We had a nice little movement a couple weeks back from $11 up into $14, and then it kind of stalled its momentum. That's where it stalled today as well. Can it get on top of this level? If it can get on top of this level, $14 to $15, expect 17 and a half, and then eventually into $20. But it's got some nice defense right there at about $14 to $15. Watch for that for you GoPro supporters. By the way, on News Like today, people were asking me, well, how'd your calls do and how did your stock do? Well, I made a lot of money on the stock. I lost less than a lot of money on the call options, which means as an investor, yeah, as an investor, yes. On days like today where it's 19% up, I would have loved not to have sold call options against the position. I get that. But nobody knows that you're going to steal a lead designer away from Apple ahead of time. I'll always take the cash flow. But on days like today, it's still a very, very good day because your delta on the call options, you will lose less than your delta on the stock, which is 1. So let's say your average delta is 6, for example, because delta, as the stock goes up, delta will increase. So let's say your average price movement in Delta today was somewhere around 0.6. Well, for the $2 up per contract, you're down 60 cents. But for the $2 for every dollar going up, you're up a dollar, which means you're still up 40% overall. So love the cover call, love GoPro, love 19% days like today. And here's to a little bit more days like today. However, I did buy back the call options I sold, which were out of the money and now in the money, very deep in the money, coming into expiration Friday tomorrow. Oh, excuse me, expiration Friday in 2 days. I reissued the calls in May. So I bought the ones in April for a loss, made some money on the stock, reissued for May. If it breaks out, I may take those off as well. Go to tackle trade, guys. Get in the game. One trade at a time, changing lives. One trade at a time. If you like the video, make sure you hit that nice little thumbs up and share it with your friends.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.